Please join me in welcoming Lamiaa Soliman, the Commercial Director League, Nicholas Wrigley, Executive Chairman from Novalight Capital Group, Faraidon Saheb-Zadha, the Managing Partner at Oros Capital Partners, Dr. Olga K., Head of Private Equity at Infosys, Catalina Valentino, Group CEO at ELIXR. Thanks.
So I'd like to start by introducing the panel, and I'll let Dr. Olga start.
Good afternoon, everyone. So I run a private equity practice at Infosys, and my primary focus is working with portfolio companies, focusing on how we can improve their operational efficiency and how we can scale the business.
Hello, everybody. Nicholas Wrigley. Not sure I should have been invited, but I'm up here. We are a small partnership. We invest our own money. Broadly speaking, we do the first mile, which I don't think there's many people in this room that do that. And we do pretty much everything in the renewables scale, not just that. We do wind, solar, storage, carbon fiber recycling, which is a new one. And we have done tidal energy, but that didn't end well.
Hello. Good to see everyone. Thank you for your attention for this panel. I work with Oros Capital Partners. We're a B2B technology investor, including in the energy sector, but we focus on the growth stage, so sit between venture capital and larger private equity. And we invest 10 to 50 million pounds in a single deal, usually founder-led companies, predominantly in the software space.
Hello everybody, I'm Catalina. I am the Group CEO of ELIXR, which is a smart city group. So we have a number of different companies, around 5 or so at the moment, which we have created, which all address smart cities in a different way. Whether that be looking at energy, whether that be looking at master planning and construction, retrofit and other. And so really what it's about is about looking at a connected ecosystem approach when it comes to smart cities, which has predominantly been fractionalized because everybody's thinking about their own subsector. And so that's what ELIXR does, and we have a 30 towns smart regeneration framework with AECOM, St Masons, some national government representatives and a few financiers. I also sit on a few boards as well.
Thank you all. So Faraidon, if I can start with you in setting the scene. From Oros Capital's perspective, what are the most significant global shifts you see in long-term energy demand and supply projections that private capital should be aware of right now?
Yeah. I'll try and do the question justice and try and speak for the very large private capital universe, albeit we operate in a very narrow area in technology and growth stage companies. I mean, I guess if you look at it from a demand perspective, you know, there is an enormous investment need to meet that demand. So over the next 10 years, I think the estimates are we need to invest something like $35 trillion to meet the demand forecasts. Now, it really depends where you sit in that universe. If you are an infrastructure investor, or you're a utility, or you are a kind of growth stage technology investor like us, the way you look at that opportunity is very, very different. So if you're an infrastructure investor, you know, you could look at all of those things all the way from generation to transmission to other kind of last mile opportunities. and there is an abundance of opportunities over the next 10 years to play in that space. But maybe it's worth kind of just reminding people what are the drivers of all of that. So we've got the business as usual increase in demand kind of tied with GDP growth, population growth. But then we also have the newer developments like the explosion in generative AI. You know, I think some estimates say over the next 10 years, the demand from AI alone could be as much as the whole of the energy consumption of a big economy like Japan. So that's, you know, obviously a very, very enormous new demand that wasn't there 5 years ago. But having said that, I think you have to be a little bit careful to just assume that that's going to come. So for example, we've had developments like DeepSeek, which does most of what OpenAI does, but at a fraction of the compute need and therefore the energy need. So there could be other developments like that, which might actually mean that we are overbuilding. So a lot of people compare the current craze for investment into AI infrastructure to what a lot of the telecoms companies did in the late 90s with the internet infrastructure overbuild, which ultimately got used. I mean, if you were very, very unlucky and you went into that space from 99 to 2005, you probably lost your shirt. But if you didn't, then you ultimately were fine. So I think there is a huge kind of demand wave coming. And then the question is, in kind of meeting that demand, where do you play? From our perspective, what we're looking for are technologies, in particular software technologies, that are helping with that. So it could be in the form of software that makes the grid more efficient. It could be hardware, for example, sensors and IoT that help with preventive maintenance, etc. It could be other technologies that help with making the overall grid more efficient. So there are multiple opportunities, but it really depends where you're sitting and what you are looking for.
Well, thank you for that, Faraidon. You've jumped into multiple topics here at once, but it's great to set that tone there. Nick, just following up on Faraidon's insights from Novalight Capital's focus on energy transition, what are the macro trends that you're observing at the moment?
Well, I mean, typically energy, even renewable energy, has been pretty boring and predictable, but we're in an environment now where we've got this sort of pendulum swinging between, continuing with renewables, storage, real emphasis on zero emissions. We've got that, and we're going the other way, largely led by the US, now being picked up, of course, speaking from the UK's perspective, by the opposition parties in the UK, where we could see ourselves going back into North Sea oil and gas and de-emphasizing the renewable side. I think that on the positive side, the demand forecast for the UK, if you add electric vehicles, air source heat pumps, new industrialization, people like Toyota turning up and wanting to manufacture 10,000 vehicles, the demand curve is the forecasts are extraordinary. I mean, 2035, it's going to double, and it's going to double again by 2050. And I think renewables will keep its place in that field simply because it's quicker. It's quicker to build solar farms, wind farms, than it is, a combined gas turbine unit. I mean, people talk about nuclear, but nuclear, we are probably 20 years off the mini nuclear, in my view. And of course, you're not factoring into any of that the social impact, right? People don't want solar farms in their back garden, but trust me, they don't want nuclear power plants either, even more so. So I think the reality is going to overcome whatever the opposition parties are promoting right now.
Great, and from a slightly different lens, Catalina, as Group CEO of ELIXR, your focus is on transforming cities and national infrastructure. What are the most pressing ground-level challenges and opportunities you're encountering within these large-scale urban developments?
Where do I start? I think one of the main barriers, well, across most industries, but particularly in ours, is legal policies and procurement. So an example that I gave to some of my fellow panelists earlier today over lunch was we have a project in the north of the UK which we have been enabling a huge master plan regeneration development of about $1 billion in gross development value. We wanted to provide the upfront costs free of charge to this local authority, obviously for deferred services. It took us 6 months to actually get them to accept the free services because they didn't have a rule for it in their procurement framework. Free of charge. So I think that statement alone probably helps to understand how much of a nightmare our policy is, our frameworks, our procurement, legal, etc. I think that is one of the biggest challenges that everybody in the private sector faces, is the public sector, to be quite frank. And it's not their fault, it's just the policies that come with it. And we need to be more adaptive. You know, technology is coming along, you've got more data, we need to be more agile, and policies need to allow for more agility, but also have to have stability, and finding that balance is quite challenging, especially when you don't have that sector experience, and a lot of, you know, leadership doesn't. So that's just one example, but I think that also, I'm just looking at it from a company, private sector, and technological lens. Collaboration is incredibly important because we can't do it alone. You know, private sector is needed. We have, you know, for example, a lot of innovations or the delivery mechanisms for these projects. But then what happens is, like I said, we get, you know, hindered by the political and policy challenges, the legal regulatory frameworks. But then obviously we need investment as well. And investment, you know, we've had loads of financiers here today, which is fantastic, but it's very challenging for a lot of people to get access to this capital. And so how do we bridge that gap? Well, you know, first of all, events like this is probably very helpful because you can be in a room with stakeholders who are, you know, open to these investments, whether that be private or project finance. But then you have to look upwards of that. And another point I'll probably make later on is, you know, infrastructure. We've talked about it a lot on this panel already, but as we have more technology, more data needs, we need more storage needs. That's where, you know, data centers come in. And then we have to look upwards of that. What about our supply chains and where all of these things come from? Where do trade deals come in? So I think these are all important things to note, but I would definitely say regulatory challenges are probably one of the difficult in our sector.
Thank you. And then, Olga, what are you observing on the market that can inform investment strategies?
So when we are designing or thinking about the investment strategies, first of all, we are thinking like what are the structural changes that are happening in the economy that's going to redefine the trajectory for the next 5 to 10 years, giving the topic of this forum, it's the best to analyze like two economies. So one is the US as the one that is driving the digital transformation, and they project the rising electricity demands. So it will be historical this year, and then it will be the historical high the next year. And it's a very profound departure from more or less flat levels from before. And what is driving it is actually, like we spoke on this panel and on the previous panel and actually the entire day, about the AI and increasing demands for electricity from AI. Then it is also expansion of the hyperscale data centers, and it's also domestic industrial policy, because like the US is looking at more like producing within the country limits, and that all is impacting the investment landscape. So when we look at the number of funds closed that are now looking at the energy and supporting infrastructure, it's increased. When we look at the number of deals, even for the first half of this year, it's the number that is equal to the full year last year. And many institutional investors, they're now looking at energy and supporting infrastructure as a defensive asset, and they're looking at this area that has continued to grow. But when we are talking about GCC countries, the story is slightly different because the rise in energy is driven by the strategic shift in how the region is evolving and developing. So there is a rapid increase of urbanization, there is a growing population, there is also increasing demands for the cooling due to the more severe climate conditions, and this is also reflected in how sovereign funds are allocating their capital. So I think like when you are analyzing like the investment strategies, it's important to look at what are the structural changes that are happening in the economy. And I just want to leave the audience with one question when it comes to energy and infrastructure. What part are you prepared to own, what segment you are willing to invest in, and which segment you are willing to outsource and let others to define.
Following up on, I think, Olga, you mentioned the hyperscalers. Faraidon, I wanted to ask you, we're seeing tech giants like Microsoft and Amazon become significant energy players, investing in new generation, even talking about the need for nuclear energy. How does Oros Capital view these companies in deals? Are they potential partners, competitors, anchor tenants? How are we supposed to evaluate this change?
Yeah, I mean, I think the overriding thought in my mind is that the demand is so enormous that I think what the larger hyperscalers and big tech companies are really looking for is for people to help them meet that demand. So I don't really see that necessarily as kind of competition. I mean, we don't invest on the infrastructure side anyway, so we wouldn't meet them. But I think even there, from my past experience, again, they're looking for people to help them. So I think if you're someone who's got a site with the right power connectivity, security, et cetera, I mean, that's a dream for those tech companies to come and become your anchor tenant, sign a very long-term contract with you, and really enable that project and give you the stability. So I think on that side, that's kind of pretty clear. And I think when they step in themselves into developing some of those sites themselves, it's more because their needs are so high that the other players in the private market are not meeting it. I think so far as we're concerned, we really come in at a very earlier stage, and we see the larger tech companies as the exit route for us. So I think where we are investing in software companies, they're still at a very relatively early stage. So to make that very real and give you real life examples, so for example, we're looking at companies that provide very new cooling solutions to data centers. And I think those will be the type of companies that we can invest in, help them develop, and then sell them to a big strategic that can then take it and apply it across their fleet globally. Or it may be companies, for example, that have developed solutions for sensors that go on to transformers and help with preventive maintenance. That could then be sold on to a bigger utility company or someone like electric equipment manufacturers and people like that. So from our perspective, and I think I would say even for the infrastructure investors' perspective, the large tech companies are a force for good because they stabilize the market. They have huge demand needs that they can't meet on their own.
Nick, on the energy transition side, as the demand for clean energy from AI data centers intensifies, is this influencing your investment pipeline at all, or having you think differently around how to service this demand?
Interesting question. I mean, it depends on where you are. I mean, if we're talking the UK, the issue around data centers in the UK is there are not many suitable locations, right? And now they are extraordinarily expensive pieces of kit. They run into the billions of dollars, and they're using the equivalent power of a small city. And actually they're competing for sites right now with other industries. Manufacturing industry, they were competing with the green hydrogen industry until that was decimated, certainly in the UK and pretty much in the rest of Europe. But when we looked at that, and we have investments, not one of our better investments, we have investments in the green hydrogen industry, and the sites we think in the UK are about 100 sites, suitable sites. You need 100 megawatts plus of power. It probably means nothing to anybody, but it's the size of Reading in terms of the needs. But you need huge amounts of water. And absolutely true, the new technologies are coming on, but they're not here yet, right? They're certainly not financeable. So what do I think? I think it's going to be, I hope I'm wrong, pretty unlikely that the UK will host many of these mega data centers. I think it's much more realistic to think that it's going to be GCC. There's lots of room. These things occupy huge amounts of space, and the sort of, you need 100 hectares might not mean anything for 100 megawatts of solar. And in fact, for a data center, you need 200 megawatts, plus you need a whole bunch of battery storage, and you need the diesel or the gas backup for it. These are big pieces of equipment, and they're sucking up power. I mean, I think was it Belgium that they're consuming 20% of the total grid power right now. And if you live next door to a data center, trust me, your lights will flicker on and off, not on and off, but they'll dim and they'll come back on again. I mean, they are voracious. Yeah. I don't know if that answers the question, but that's my view.
Very insightful, thank you. Olga, I wanted to ask you, in Infosys, what are you seeing in terms of the space of the intersection of AI, data infrastructure, and energy?
So I think as a technology company, it's a very critical question for us. And when it comes to energy, we need to think about storage. We need to think about the infrastructure. And we mentioned on this panel how you actually design the data centers. So we have various solutions to that. So we have, when it comes to software, it's energy as a service. When we combine the analytics related to the storage and renewables, because it's very important to predict and forecast, for example, the solar capacity, and try to analyze what will be the usage, and then connect it with the generation and with the load to reduce the cost. And that's actually very helpful for the energy intensive production, and that's what relates to the software side. But we also are looking how we actually, and we are actually one of the few who is investing in the cooling technology, and looking for the alternatives. And in terms of traditional way of cooling the data centers with water, with fans, we partner with some industry players to design solutions when the servers are loaded into the fluid, which actually removes the impact on the environment, and it helps to reduce the water consumption. And this is one of the areas that we are actively investing into, and looking how we actually redesign the data center in a more environmentally friendly format.
Thank you for that. And Catalina, given your work across smart infrastructure, energy systems, and innovative finance models, in your view, how can the better use of data and technology accelerate the delivery of energy-efficient, future-proofed urban developments? And if you can speak to us a bit more about your experience, especially with Saudi Arabia and NEOM, and that I know we heard earlier a lot about NEOM.
Yeah, absolutely. I like to think of technology and data as going to a doctor instead of Googling your symptoms. I think we all want to know the accuracy of how our buildings perform, and that's exactly what data and technology can do. For example, one of you mentioned sensors earlier and IoT. In one of our companies, we're using IoT sensors, which we are installing into every single room of an asset, which can diagnose the building in real time. What does that mean? Well, it's taking in pressure, temperature, humidity, all of these different factors, and then populating the data into a dashboard. And we can actually see through heat mapping tools, through all sorts of other fantastic technological tools, we can see, okay, we're losing a lot of heat around this particular area, or over here, or around the windows, or the underfloor, or whatever. And so instead of going into buildings where you have to, A, train and upskill people to then, work for you and have to then go into the building, that alone is the first stage. Second of all, the manpower and the OpEx that you then have to spend on them going out to site. And it's not just one person. You probably have about 10 people coming around, engineers, this, that, whatever. And then after that, you finally get a bit of information. But is that really real, true information and data? Well, probably not, because they've probably gone in with a tape measure and looked at, hey, the windows look leaky over here, or they do, they're doing this over there. But actually, if you have data to tell you this is what's happening, happening, and you could put in these sensors, for example, and I'm sure there are others on the market, but ours in particular, you install them within 30 minutes, and then you have continuous monitoring of the asset. And isn't that a much smarter way to be living and to be, financing against that kind of data? Because at the moment, we're financing against a lot of different types of assets which aren't performing well enough, but we also don't have enough data on these assets. So if we could finance and de-risk our financial lending, for example, that's one thing. I don't know if many of you are familiar with black boxes, which are in cars, which are typically for young drivers because they're, seen as a bit of a risk, and so they can increase and decrease insurance premiums. But essentially, it's kind of the similar system, right? So if you install sensors or other types of technologies to monitor homes into a building, essentially you can start looking at de-risking your finance, de-risking your insurance, because you actually know what is happening. And so that is a prime example of how technology can help understanding our assets, but also helping stranded assets as well. I mean, a lot of our clients are banks, a lot of them are local authorities or asset owners, and these guys have a lot of stranded assets on their books, so they have no idea what to do with. It's just losing the money just sitting there. And so what we've done is we've taken all of those assets, we've put in these sensors which tell us what's happening with them, and we actually realize that a lot of the times the buildings aren't performing as badly as we think they are, so they have to spend less money on renovating them and less manpower and so on. And so then these then become, get to be put back onto their asset book, and they're no longer stranded. And so those are prime examples of how we can utilize data in our asset portfolios. And then obviously, we're just talking about technology here because that's the lens that I talk through. But technology is data, and as I mentioned earlier, data has to be stored somewhere. And obviously, then you have to look at the actual energy usage, as Nick was saying earlier. Data centers, they cost a lot to run. And so we have to be considering all the rest of the kinds of infrastructure that we have to be looking at after that. And then, okay, well, who's going to finance these things, And so we have to be considering finance. And then we have to look even further up from that. Because a lot of technologies or infrastructure, they require things like rare earths or precious metals and all of these other things that we need to be looking at. And a lot of the time, you have to go to China for this because they have about 90% of that market. And so then we have to be considering trade deals and other supply options. And it just becomes a huge ecosystem that we do have to be considering. So I always talk about technology from that lens and from the private sector, but we also have to be considering upwards of those supply chains. I don't know if we want to talk about Saudi now or if we come on to that later.
No, feel free.
Okay, yeah. And we're doing a lot of work in Saudi at the moment. We are hopefully setting up a factory there to export clean tech, which means that we're exporting our sensors, and later down the line we'll be manufacturing semiconductors, which I know Majid earlier on a panel said that it's very important to have a local supply of this for the region. The reason why we chose Saudi Arabia and NEOM specifically is because we believe that geopolitically it's the future. Not only is it ahead of its time, it's trying to make, it's an ambitious plan, but it's doable over the lifetime of what they're expecting. If we look at manufacturing in the UK, well, that's not viable for this type of scale that we need, and obviously all the other complications alongside that. The US, we considered, it could still be an option. Asia, you've got Africa, there's so many regions that we explored, but if you think about Saudi Arabia and its proximity to China for the materials, the sourcing, its proximity to Europe, which is where a lot of our clients are, and then also the new trade deals that are coming in with the US, and they're best friends now. So isn't it a fantastic market to be a part of? So we really think that geopolitically, Saudi Arabia, the Middle East, GCC, whatever you want to call it, is the geopolitical future, and that's why we chose that.
Thank you for that. Faraidon, just following up on that, are you seeing compelling opportunities in grid modernization and smart grid technologies, particularly as the UK and the GCC regions look to integrate more renewables and manage distributed energy resources? So are you seeing more of the opportunity that Catalina is talking about?
Yes, certainly. I mean, I think you have to take a kind of long-term view of this. The primary and kind of most immediate need is around the need for more supply for the AI workloads. So there's quite a lot over the next 5 years around how you meet that. I think we saw on the recent Trump visit to the GCC countries, there was an agreement to build a very, very large AI data center in Abu Dhabi. And to your point, I don't really see that happening anytime soon at that kind of scale in the UK. But I think just a kind of slightly tangential observation. If you listen to people like Eric Schmidt, who used to be CEO of Google for many years, you know, from his perspective, there's a huge global race on AI, mainly between China and the US. And the single biggest hurdle to, you know, being further ahead on AI is energy. And when you look at the need, both in the US and China, it's enormous. And I think the US will struggle to meet that and build enough energy capacity, whereas China can. You know, with their decision making, similar to the GCC, it's very, very straightforward. There is one person in charge of the whole country, and whatever is needed, a decision is made very quickly, and it's delivered very quickly. Whereas in the US, despite the kind of Republicans being in power and trying to make things more streamlined, I think it'll take them a lot longer. So what they originally, I think people thought that they would rely on Canada for that energy demand, for that energy supply. But with the current changes in foreign policy, that doesn't look like it's going to happen anytime soon. So I think at a global level, when you look at that, that's pretty existential. And I think the sad thing with the UK is that yet again, we're leaving something that's very, very strategic to other countries. So we don't have a national AI champion, even though we've produced a lot of the talent. So Geoffrey Hinton, who came up with the whole transformer technology invention, left the UK to go to Canada and then worked at Google. And that was really the bedrock of the whole generative AI revolution. So I think from that perspective, the winners of all of this will be China predominantly, and then places like the GCC where you can actually make decisions and execute very large projects very quickly. But unfortunately, again, in Europe, I think we'll be left behind unless things change. But I'm pretty pessimistic on it.
Nick, seems you've...
So I just wanted to comment on the irony, of course, behind you know, the interaction of data, AI data centers and grids. I mean, somebody used the word, I think you did, smart grid. Well, as probably Spain has shown everybody pretty bluntly, you know, grids are far from smart, certainly in Europe, and that's pretty much Europe-wide. I mean, what's happened, without boring everybody, is that these grids are manual. And if you've ever seen how a grid works, there's a team sitting in an office, and they sort of plug little wires into the wall. I'm exaggerating, but they call down power as and when the demand is required. And guess what? They get it wrong because they're only human. So AI is needed to manage that. They're trying to manage today, just to give you a sense, that the system was in the UK designed for around 500 power stations, mostly coal. That's the 50s, 60s, 70s. All that, of course, has changed. And at last count, there's about 2,500 what we would call power stations, which is largely gas, a little bit of coal, nuclear, solar and wind. But if you add in all the rooftops on the residential and the C&I, it gets to 1.2 million power stations. And that is all being managed manually today. And guess what? They get it wrong. And you know what happened in Spain could easily happen in the UK. In fact, those of you who follow this sort of thing, you know, we get to every Christmas, and when the kettles go on after EastEnders, there's a huge concern because of the power, this is a true story, because of the power surge, that the lights will go out. Once the lights go out, as you see in Spain, it takes 48 hours to come back, and the losses are colossal.
I'm just conscious of time, and I think, Olga, I wanted to ask, or, you know, considering the strategic importance of energy transition and digital growth in both the UK and GCC, where do you see the most potent synergies and co-investment opportunities?
I think probably we already touched on a number of areas regarding like our investments. We see GCC as an important region for the collaboration. At the moment, we don't have a significant presence yet, but that's an important region for us for the future.
And just to conclude, I think I'll start by Catalina. I just wanted to ask you all the same question. For private capital leaders in our audience, what is one actionable piece of advice you would offer today for investing wisely in the energy future shaped by AI and digitalization?
I think investing with the right information. I covered this earlier when I was talking about data. If we have the right information, it de-risks us. And so we're finding this a lot with banks that we've worked with. They are now wanting to move away from financing EPCs because obviously we don't have enough information when it comes to EPCs, and they want to start financing against real-time auditable data. And so if we can start doing that, especially when it comes to energy and other sectors, that would certainly de-risk us.
Really difficult to answer for everyone, given there's a whole spectrum. But I guess the one thing I would say is that people should be mindful that depending on where you go, there is a risk when it comes to the additional AI capacity being built for data centers, etc., of a hype cycle and overbuild.
I'm going to be controversial, and I'm going to say the big risk is that you're too risk averse, and that you need, a portion of your capital has to be invested in what you would call high risk. It's what I do, but my capital is not going to be enough. We need to feed this new energy system, and the only way we feed it is by doing greenfield projects, which tends to be the last on your list, right? And I can tell you, we have clients who have between 800 and £1 billion a year to spend just on UK solar projects. Trust me, what's their problem? They can't find the projects, not at the level which has eliminated, the risk they're prepared to take, which is basically zero. Don't tell them I said that.
I was going to say that energy is rather a difficult and technical sector, so it's definitely not for everyone, but at the same time, the increasing energy demand is not going to change, and the development of AI technology is highly dependent on the ability to overcome this hurdle. And I think that's why at the government level, you see there are a lot of initiatives to find these sources of energy, from nuclear to renewables, and optimizing the current usage of energy. So that's the sector that will continue to receive allocations.
So I think to conclude, we've spoken about huge energy demand, obviously fueled by AI, and I think if we look at the current forecasts, we hear all sorts of statistics that are very hard to wrap our head around. But if we rely also on all of the innovation and technology that especially Catalina and Faraidon touched upon, I think then these forecasts could change, and there could be lots of room for investment on those fronts. I wanted to thank you for attending with us, and thank you to the panelists for your time today, and